Hi guys, my name is Igor Vasiliev, and today we're going to talk about banking stocks and why I avoid investing into banking stocks, at least for now. A lot of people they believe that stock market fell quite a lot, and there are a lot of companies that at very attractive prices. And I've already heard quite few opinions that people are going to buy big banks, and I'm just going to express my opinion that I believe that it's a bit too early to invest into banking stocks, and I'll explain the reasons why I think so. Now, plan for today, it's going to be a short video, just a few minutes, but plan for today is current market situation, what is happening in the world, and then we'll talk about how the banks make money in order to understand what can we expect from the operation in the future, and then we'll talk about what the main risks for now for banks specifically, and then I'll show you the history how the largest banks in US can handle the crisis. Okay, that's the main topic for today, and I'm going to be short, and then if you have any questions you can post it in the comments and I will try to answer them as I can. Now, today is the 1st of April 2020, and the world is crying because of pandemic. Pandemic has spread across the globe. Majority of countries are affected. Some countries are better, some countries are worse, but in any way, we can see that a lot of businesses within those countries they're affected as well. Many businesses worldwide have closed their operations. Probably first industry which was affected it was travel industry, hotel industry, then it was retail industry, and many other industries. I already hear quite a lot that people get fired from their jobs, and without any kind of any future employment possibilities. Especially elderly people get fired, but young people as well. So it's kind of very tough situation happening for a lot of people and for many businesses as well, because I've already heard about couple bankruptcies in travel industries, and as you can probably see that those people who booked tickets they getting money back, and we're going to talk how it can affect the performance of banks as well. Now, as you probably have seen within last month, since the February 2019, where there was a peak probably of S&P 500, and it's dropped within 1 month. On the 24th March, it was the lowest point, and it was 35% drop. So officially we're in a recession. Remember that like it's kind of commonly believed that if they drop below 20%, it's correction. But if it's more than 20%, it's already recession. So we're officially in a recession. The market pulled back up a bit, but I believe it's just the first wave, and we'll expect a lot of volatility in the market within coming months, because the kind of the coronavirus is spreading. A lot of countries doing a lot of kind of activities to prevent this, but still nobody can tell exactly how long it's going to last, because such situation never happened before. Like, I mean, maybe in 18th century when it was in Europe, there was medicine like absent practically, and at the moment the similar situation and it's spreading much faster than before. So we don't know what to expect in the future, because this type of crisis never happened before. And I am an investment area. I have a lot of friends who invest in stocks, and a lot of them they're very tempting to buy some stocks, and some of them they believe that very attractive prices, because last year they would wish the price be like that. And especially a lot of people talk about banking stocks because they believe that banks they're going to survive, and they're going to like flourish after this crisis, and they're going to grow. And during this video I just want to show you how banks can be affected in the big kind of like theme, and why I would prefer to avoid banks, even biggest banks in US or any other country at the moment. Okay, so let's start from the probably the main point, how the banks make money. And if you go like to any bank and they put money into the deposit on your bank account, so the money is not just laying there just doing nothing. Banks, they use their money, okay, and the way they use it, they lend the money to somebody else. They lend it to person, they lend it to business, they lend it to construction company, they lend it for different purposes. As you can see, it could be mortgages, it could be business loan, personal loan, when person buys the car, or they're trying to improve their house, or just want to go for holidays, or credit card loan. So people use credit cards on a constant basis. So that's how banks, they generate their income. And if you go like gross income, that would be in different banks. It varies, and it can be 40%, it could be 50%, it could be 60%, it could be more. Okay, but then every bank has now also non-interest income. When you getting the loan, and you're paying interest, but also when you're getting a loan, there is a certain loan processing fees which is hidden in majority of cases. And when people borrowing money, because it's kind of distributed over the time of the loan, they don't notice it, but that's another fee which banks collect. Also, if you provided a late payment for a mortgage or any other payment, so you get some charges, okay, and you can see foreclosure charges, over limit charges when you go, especially for businesses, when they go and for example, they spend more than they have. Some banks, they allow it, like overdraft, and of course they charge for that. Okay, and then credit card annual charges, service charges, dishonor charges, and different penalties as well. So if you go to like income statement or balance sheet, and you look what's the proportion of this type of income, you will see that in some cases it's nearly half. But then non-interest income has very high expenses as well on the top of that, and we're going to look at a couple reports which I'm going to show you where you can see that. Now, we know that that's how the income is generated. So what's the risk right now? And we have couple of risks right now for banks. First of all, it's coronavirus. That's a pandemic which is spreading around the globe. And what we can see already, first of all, we see that different countries, they stimulate economy by like printing a lot of money. It's first of all, but secondly, they're reducing the interest rate to very, very, very low levels. So when the interest rate is very low, banks, they make less money, okay, because they're kind of made to reduce their rates as well. Okay, and as a result, their loan income is going to be not as they expected. Okay, that's first reason which will affect their income. The second thing, if people are afraid of uncertainties, they don't know what is going to happen in the future, right? They are not confident if they're going to keep the jobs or not. They're not going to buy new houses. So, because that's probably the biggest purchase in your lifetime. Like, probably some investors, they buy multiple houses, but majority of people, they still buy one or two, maybe like house for their children, or like spare house. And before they do that, they think a lot. So can you imagine during this particular situation, during this year, or maybe even next year, people are not going to jump and buy houses. Now, it means that the amount of new mortgages will be reduced. The second thing, people not going to buy high items also, like I would say they are not going to buy maybe cars, like different like caravans, boats, maybe expensive TVs, and etc., etc. They won't go for expensive holidays, so and they won't borrow money for these items either. So it means banks will have less this type of loans, and of course their income will drop in the future because of that. Now, the second thing, which is very, very important as well, bad debt will be increased. And there is a big reason for that, because you already know that some businesses get into liquidation, especially in travel industry. And you're probably aware that majority of business, they don't operate using their own cash. They operate using bank's loan. So it means that if the company goes into bankruptcy, bank has to liquidate their assets and collect whatever they can. But some companies, they have practically zero tangible assets, so it's very difficult to sell it, and especially during this time. I mean, if the travel company goes bankruptcy, or airline company goes into bankruptcy, even if they recover certain planes, where they're going to sell it, because nobody is buying right now. It's quite difficult to buy, so banks will have to reduce the prices in order to sell it, or have to keep it on a balance, and they won't get that cash. So, and in some cases they won't even able to recover their debt, because company doesn't have any assets. So that's the very important point, because banks might lose quite a lot of their income when we're going to look at this. We don't know what the percentage we can expect in a bankruptcy rate. Like in some industries it would be very high, specifically if we go in a travel industry or airline industry or retail industry. I presume there would be a lot of bankruptcies in that area. Also, more people will fail their payments due to loss of income. So it's a personal loan already. It's not the business loan. So if we're going to look at those people who have their own mortgages and they had secure job, but then they got fired. Now, how are they going to pay their mortgages? They cannot do that. So, and they're going to fail it. And of course, banks will have to seize their property if they can. And then if they seize it, they have to sell it. And again, so it might affect the property market. The property market can go down. In some cases, if it was a higher leverage, like borrowing, like I mean, some people borrow 90% of the value of the property. So if the property drops like 20% because of this crisis, so it means the banks even cannot recover the full amount what they gave to the person. So that's another kind of big risk for banks. Banks can not only postpone their income to the future, but they actually can completely lose this income which they can expect. And also some people probably will fail payment their credit card and their different loans as well. Another thing which will be affected, the non-interest income will actually go up, because if we go back and look what kind of incomes, it's late payment charges. So I presume more people will fail paid on time, so there would be higher payment charges, foreclosure charges, overreach charges. So all these charges might be increased, but at the same time, related expense will go up even more, because can you imagine if cost of chasing borrowers, you would have to call somebody, you have to chase them, you have to write the letters, you have to remind them. So it's quite time consuming for people and for banks, because they have to have real people who doing it, and it's expensive. So of course the cost of getting the money back, it will be quite high. And also if they're going into liquidation and trying to liquidate some kind of business, the legal action during bankruptcies quite costly as well. And that's why, even if especially for small companies, if the company is small, so retail shop, and it goes into liquidation, in some cases the cost of like lawyer might I mean kill the whole amount of money which bank will receive. So because you have to pay the lawyer for his job or her job, and then the banks practically doesn't have any money left after that, okay, to receive it back to the balance sheet. So that's why I believe that banks, they have quite a lot of risks right now. And another big risk as well, it's the prices of oil. And it's kind of for economy. Personally, I believe the prices of oil is good, because the transportation is going to be less, because the petrol is less. A lot of people, like a lot of like goods are made from like oil as a substance. And I believe it is a good that to have. But for some companies, especially exploration companies, it's a very bad thing, because if the price of oil goes like now, it's below $20 per barrel, it means that some companies that cannot sustain to get the oil, because the cost of production is more than like $25 in United States for majority of companies. So it means that those companies, they would have to sell the oil with a loss, which they cannot do for long term, or they have to stop the operation. And if they stop the operation, the cash flow stops. And majority of those companies, they high leverage with loans. It means that they will file they will file for bankruptcy, and banks probably won't see um, anything from them. Okay, so that's why I believe that banks at the moment, they have a lot of risks, because their future income will be affected, and we don't know how much is going to be affected. And kind of a lot of people believe that that's the price, which is fantastic now, and they look at price earning ratio, which is below 10 now, and they believe, oh, that's just amazing. But you have to look at the future price earning ratio, what is going to be next year, or maybe year after that. And will the bank be able to sustain the operation as well? Because remember that banks, they also leverage. And there is another risk as well, which I didn't put it in here, is that people who lost their jobs, they're going to withdraw their deposits from their account. It means that the amount of money people keep in the bank will be going down. And when this amount goes down, the banks, they have to sustain a certain proportion, because they cannot lend all the money which like people provided into the bank, like everything. So it has to be in certain proportion. So they will have to get their loans down as well. So they won't be able to issue new loans if the amount of deposits is going to go down. So it's kind of another thing. It's same story happened in 2011 when even the interest rate was quite low, but banks won't lend any money. So it was quite difficult to receive the loan. So this situation might be repeated again in the future. Okay, so that's the value line report. I use value line as a like information, financial information. I just want to show you a couple things here. If you look at the right hand side, and you can see that the amount of total assets, it's JP Morgan Chase. It's the biggest bank in United States, like at least based in 2019, and that's what we can see, the total assets, and that's what we see total loans. Nearly 1 trillion, 955 billion of dollars. And net interest, we can see 57 billion dollars. That's what they receive and make from the loans, but also they have a loan loss provision. So they expect that usually part of those loans they're going to fail. So, and that's the amount which they have. And look at that non-interest income which they have, $59 billion, but then the expense for non-interest income is 66 billion. So they actually, in order to receive that income, they have to spend more money. So the net profit after taxes, and the tax rate is in our case 20%. So we can see it's $34 billion. Now, the main question is how this profit is going to be affected in the future. So we know that the interest rate is going to be reduced, so the income is less. So some companies are not going to pay back. The loan loss is going to be increased. The question only which we have to kind of assume for how much. So if we look at 955 billion dollars of loans, so can you imagine just if 5% of businesses, just 5%, and I personally believe there would be much more businesses will be affected. So can you imagine if 5% of those borrowers will be affected? It means that about close to $50 billion won't be returned back to the bank. So if the bank net profit, annual profit is 34 billion, it means that banks will have a loss and then they will have to have like nearly 1.5 years of recovery to recover that debt. In addition to that, we have to remember that banks, they also have debts, and currently JP Morgan, they have about 300 billion dollars of debt, so they have to pay it back, or they have to like reborrow it money again and again and again. And it seems like that's what happened, and so they constantly keep borrowing money as well. So the question is, if they have loss, will they be able to refinance themselves as well? Okay, that's kind of questions you should have to ask. And then we're going to see, because the similar situation happened in 2008 and in 2000, and we're going to look how banks were affected, because a lot of people forgot about it. It was like 12 years ago. Yes, there was a recession, and we believe, yes, it was a trouble there, but now it's different. So but remember, banks, they make money when they give the loan, and if this loan is not returned back to them, they're going to be in a big trouble. Okay, because when people come back to them and ask for their deposits, when you go to the bank and ask for their deposits and they don't have this money because they borrowed, didn't pay the money, so the bank won't be able to give it to you as well. So, and let's have a look here on the left hand side. You can see that the total deposits in 2019, it was $1,562,000,000,000, right? And the loans, it was $946 billion. Okay, so can you imagine if the level of deposits is going to be reduced? So when people start coming and because they are unemployed and they want to withdraw the cash and spend this cash, so what is going to happen, right? It will probably go to another banks, maybe not JP Morgan bank, and the amount of loans which bank can issue will be reduced as well. Okay, another thing is, which I see here in asset column, securities. So I'm not sure completely what do they mean here by securities, but I presume that a lot of banks, they have some kind of securities. Maybe it's shares of different other companies which they buy, or maybe other financial securities. Because of market crash, it may be now not $809 billion. It might be also reduced 10, 20, maybe 30%. So that kind of reduces their book value as well. So you have to keep an eye on this kind of stuff. So value line, I like value line because it gives certain outline here, but this report was issued 7th of February, before the crash happens. It's people already talked about coronavirus at that stage, but they didn't kind of anticipate yet how much the economy will be affected by that. Then another bank, which is Wells Fargo. Also, the price is still here, $47, and PE is 13. Now it's much less. And also a similar situation, if we look at loans, it's $956 billion of loan, and we can see that net interest, so the core activity of the bank from the interest payment, is $44 billion. Loan loss provision, it's about 10% of that, it's $4 billion, and non-interest income, $39 billion. And non-interest kind of expense, it's more than that. Okay, so you see that for Wells Fargo to collect their fees, it's more expensive than for JP Morgan. Okay, and the net profit is $16 billion. Now the question again, so if we see that practically $1 trillion of loans, and 5% of those loans will fail, so it's close to what, about like would say 50 billion dollars. So, and when the company has $16 billion net profit, it means nearly its 3-year profit. Okay, that's how banks can be affected. And can you imagine if the banks affected so much, and also they have to pay their loan, because they also have a loan, $225 billion of loan, and again, will be they able to refinance. So that's why if you decide to invest in a bank, you have to consider all these things before you jump. So also deposits, you can see $1.3 trillion. Okay, and if again people start to withdrawing these deposits and spending these deposits, so banks have to adjust the amount of loans they provide. Okay, So just to show you a couple things which happened in 2008 and 2009 and compare with what is happening right now. So I just went to Wikipedia and just downloaded the list of biggest banks. I'm not going to go through all the banks, but going at least through first five. That's what happened. So JP Morgan in 2009 dropped 70%. So I just looked at the highest point somewhere here and then at the lowest point, and I just calculated it's dropped just a bit more than 70%. Right now, the drop is 45%. A lot of analysts, they are saying that the effect of coronavirus on economy already is more than during this period of time. So we already, it's affected more. But the banks, they didn't drop yet that much. Why? Because they didn't report their earnings yet. We're going to see their reports soon when they're going to show the first quarter and the second quarter. And the majority of businesses now are not going to fail straight away. Only some, the very weak businesses, they're going to file for bankruptcies right now. But the bankruptcies probably will be during the next second half of this year, or maybe after that, because some companies, they still have some cash. So the banks will be affected, not right now, they will be affected during, like, I mean, all 2020 or maybe even 2021. So the drop might continue after the earnings report. So be careful, especially if you have already banks. Think twice if you want to hold it or do something with that, at least hedge it somehow. So okay, the second bank is Bank of America. The drop was 95%. Guys, when you believe that the bank is going to recover quickly, you can see this bank even didn't recover, okay, until the level. So if you hold it like a bank in that time, it was $55 and then it dropped to, I think, $2.5. So I mean, it's never grew that high as well. Okay, so it means that now it's 49% only drop. So if we look at Citigroup, probably the biggest fall at that stage, 98%, and the biggest fall right now already. So it's already 61% down. At least 61% the lowest point. Now it's a bit bounced back with the index as well. So we can see that. But still, we see that Citigroup is going much, much lower as any other bank. Wells Fargo, 82% drop from the highest point here, the highest point to the lowest point in 2009. So 82%. Now it's 54% down already. Okay, again at lowest point here, it's a bounce back a bit. Goldman Sachs, 81% in 2009 and 48% now. So when you see this number, 48%, you believe, oh, it's great, you can buy the bank in half of the price which it was last year. But guys, when you look at the previous crisis and you understand that the current situation is even more severe than that crisis, so you might think, wait a second, I'm going to wait. Maybe some banks even won't survive. Remember how many banks get into liquidation during that time as well. So as a result, what the possible actions we can do, right? First of all, if you already have bank shares, it's a tough thing because most likely you're kind of very emotional right now and you think, oh my goodness, what should I do? Like, I mean, there is no right or wrong way here. Okay, you can sell it and fix your losses. You get your half of your money back and you might avoid the future loss. All right. Another way, you can wait until it recovers, like Warren Buffett does. He sits on his shares, and probably he's not going to sell Wells Fargo. He's got Wells Fargo. Maybe he's going to sit it for the next 10 years and going to keep it and wait until the bonds recovers. Because at the moment, bonds are stronger than they were in 2008. They are kind of, because the regulation is kind of strict compared to what it was in 2008. And for banks, they kind of are going to survive easier this time than last time. But at the same time, how long are you going to wait until it recovers? And will it recover at all? Maybe it takes 10 years and then the price of the stock is going to be much lower than that. Now, and then you can hedge with lip puts, especially if you don't want to sell it and you're afraid that the stock might go another 30% down, so you might buy leap put options. Yes, the put option prices now are absolutely crazy, they're very expensive, but if you buy a leap put option, you might pay 10% for next year, maybe a bit more. But if the stock goes up 20-30%, yes, you lose this kind of insurance of 10%, but then you'll make all the growth. But if it drops in price, at least you're protected. So think about it. And for people who understand how covered options work, so you might start recovering some of your losses by selling covered calls. But guys, it has to be done professionally, because at the moment volatility is so huge. Brokers and the market makers, they make a lot of money by creating the huge spreads. Sometimes spreads is like you sell the call option for 60 cents. If you want to buy it straight away, it's $1.20. So it's like crazy spreads. Okay, but still, personally, I sell covered calls for some stocks which I currently have, and the premium I receive is just fantastic. Last year, you would dream about the premiums I receive right now, because last year I might get 3% a month. Now I'm getting 3% within 1 week. Even sometimes faster. So that's another option, but you have to understand how it works. If you don't have bank shares, guys, personally, I believe it's much better to avoid it for right now and wait until the situation with coronavirus is cleared up. I understand that there are a lot of positive people in the world, and I am a very kind of positive person. I always believe in something better happens, but currently I would probably wait until we see that pandemic is over. It's first step, and secondly, we see that the banks are not affected as much, or you buy them when they're already affected, when the problem already has happened, when they already reported all their bad earnings and the price already collapsed to nowhere in a very low level, and you understand that's the bottom. When you see that, then you might buy it when you see the banks are going to kind of recover back. So you might pick the banks maybe 30 or 40 or maybe 50 maybe percent lower than the current price. So that's my opinion, guys. If you have any questions, please post it in the comments below. I would love to probably to prepare my videos. I'm going to put more videos on my YouTube channel from now on, and if you would like me to cover any industry or cover any particular stock, please put it in comments. I will definitely keep it in mind. I am full-time stock market investor. I manage quite big bulk of money for myself and some other people, but guys, this is educational material only, so if you want to learn more, just put comments and I would love to answer that. And guys, be profitable and enjoy your income, and thank you very much for watching this video, and hopefully put like if you like this video, and if you don't like it, put unlike to somebody else, and see you next time. All the best. Bye.